Good morning, students. My name is Mohammad Turab Sohail, Faculty of School of Finance and Commerce, Galgodias University. This is the second lecture of financial accounting. Today, I'm going to discuss important topic, that is uses of accounting information and accounting concept, right? Students, in the previous lecture, I have already discussed meaning and definition of accounting, objectives of accounting, advantages of accounting, and branches of accounting, right? Students, objective of this class is to familiarize with the users of accounting information. Second objective of this session is to familiarize with accounting concepts. And third objective is to apply the acquired knowledge in the corporate world, right? Students, this is the introduction part. It is correctly said that accounting was born without notice and brought up in negligence. It means accountancy was first practiced and its principles, that is rules and guidelines, were developed later on. There is no doubt that rules and guidelines are necessary for recording the business transactions to bring some uniformity in the preparation and interpretation of basic financial statements, namely that is profit and loss account and balance sheet. An accounting concept is a basic assumption or opinion for recording business transactions which ultimately lead to the preparation of basic financial statement. And assumption is something that is accepted as true without proof, right? Students, now I'm going to explain the concept of users of accounting information. There are mainly two types of users of accounting informations, that is internal users and external users. Internal users is also known as primary users. It includes owners, managers, employees, right? On the other side, external users is also known as secondary users. It includes investors, lenders, suppliers, customers, tax authorities, government, auditor, and public, right? I'm going to explain internal users and external users in detail in the next slides, right? Now I'm going to explain the internal users of accounting information in detail. First one is owners. Owners need to assess how well their business is performing. Financial statements provide information to owners about the profitability of the overall business as well as individual products and geographic segments. Accounting information helps owners in assessing the level of stability in business over the years and to what extent have changes in economic factors affected the bottom line of the business, right? Second one is manager. Managers need accounting information to plan, monitor, and make business decisions. Management required accounting information to monitor the performance of the business by comparison against past performance, competitor analysis, key performance indicators, and industry benchmarks. Managers rely on accounting data to form their business decisions such as investment, financing, and pricing decisions, right? Third important internal user of accounting information is employees. Employees are interested in knowing how well a company is performing as it could have implications for their job security and income. Many employees review accounting information in the annual report just to get a better understanding of the company's business. In recent years, the increase in number of shares and share options scheme for employees, particularly in startups, has fostered a greater level of interest in accounting information by employees. Right? I hope it is clear to everybody. Students, now I'm going to explain the external users of accounting information. Right, first one is investors. Investors need to know how well their investment is performing. Investors primarily rely on the financial statements published by companies to assess the profitability, valuation, and risk of their investment. Investors use accounting information to determine whether an investment is a good fit for their portfolio and whether they should hold, increase, or decrease their investment. Right? Students, second important external user of accounting information, that is the lenders. Lenders use accounting information of borrowers to assess their credit worthiness, that is their ability to pay back any loan. Lenders offer loans and other credit facilities on terms that are based on the assessment of financial health of borrowers. Good financial health is indicated by the borrower's ability to pay its liabilities on time, high profitability, substantial securable assets, and liquidity. Right? Now, third important external user of accounting information, that is suppliers. Just like lenders, suppliers need accounting information to assess the credit worthiness of its customers before offering goods and services on credit. Suppliers need accounting information of its key customers to assess whether their business is in good health, which is necessary for sustainable business growth. I hope it is clear to everybody, right? Now the fourth important external user of accounting information, that is customers. Guys, industrial consumers, however, need accounting information about its suppliers in order to assess whether they have the required resources that are necessary for a steady supply of goods or services in the future. Continuity in supply of quality inputs is essential for any business, right? Now, fifth external user of accounting information, that is tax authorities. What does that mean, guys? Tax authorities determine whether a business declared the correct amount of tax in its tax returns. Occasionally, tax authorities conduct audit of the tax returns filed by businesses in order to verify the information with the underlying accounting records. Right. Tax authorities also cross-reference accounting information of suppliers and consumers in order to identify potential tax evaders. I hope it is clear to everybody, guys. Sixth important external user of accounting information, that is government. What does it mean, guys? Government ensures that a company's disclosures of accounting information is in accordance with the regulations that are in place to protect the interests of various stakeholders who rely on such information informing their decisions, right? And now the seventh important external user of accounting information, that is the auditor, right? What does that mean? Guys, external auditors examine the financial statements and the underlying accounting records of businesses in order to form an audit opinion. Investors and other stakeholders rely on the independent opinion of external auditor on the accuracy of the financial statements, right? Eighth important external user of accounting information, that is public. Where it is also very important external user of accounting information. General public may also be interested in accounting information of a company. These could include journalists, analysts, academics, activists, and individuals with an interest in economic development. Right? I hope it is clear to everybody, guys. Now, students, I'm going to explain the meaning of accounting concepts. Meaning, an accounting concept is a basic assumption or an opinion for recording business transactions, which ultimately lead to the preparation of basic financial statements. An assumption is something that is accepted as true without proof. It is a recognized presumption that an accounting entity is a separate from its owners in every type of business organizations like sole proprietorship, a partnership firm, or a joint stock company. Accounting concepts are the foundations of the accounting information useful for various users, right? Students, there are 10 accounting concepts. Number one, business entity concept. Second one is money measurement concept. Third, going concern concepts. Fourth, cost concept. Fifth, dual aspect concepts. Sixth, accounting period concept. Seventh, realization concept. 8, accrual concept. 9, matching concept. 10th, objective evidence concept. Students, I'm going to explain these accounting concepts in details in the next slides, right? Students, first accounting concept is business entity concept. A business and its owner should be treated separately as far as their financial transactions are concerned. For example, when the owner invests or introduces money, the capital in the business entity receives the assets, cash, and the capital of the business is treated as a liability of the business entity towards the owner, right? Second accounting concept is money measurement concept. What does it mean, guys? Money measurement concept किसे कहते हैं? Let me make you understand in a simple manner. Money measurement concept means that the business transactions are recorded in the books of account in terms of value of money. At the time of recording the transactions, non-monetary events such as the strike in the factory, retirement of the general manager, the good quality of the product are produced by the firm, etc. cannot be recorded because these events cannot be recorded in the terms of money, right? Third important accounting concept is going concern concept. What does it mean, guys? Under the going concern concept, the going concern concept means that in accounting, the business will continue to carry on its business activities for an indefinite period of time. Every business enterprise is treated or regarded as a going concern in the sense that it has a continuity of the life, is neither the intention nor the necessity to dissolve the firm in the near foreseeable future, right? Fourth important accounting concept is cost concept. What does it mean, guys? The cost concept means that a fixed assets like building or machine, etc. is recorded in the books of account at the price actually paid for it. It is called its acquisition cost, which includes purchase price, the amount spent in installing, and all expenses paid in making the assets ready for use. The cost concept is applicable only to fixed assets and not for current asset, because only fixed assets are shown in the balance sheet at the respective cost prices, right? Fifth important accounting concept is dual aspect concept. It is very important accounting concept. Under the dual aspect concept, it is also known as an accounting equation concept. This concept emphasizes the fact that every transaction has twofold effect, and it's commonly expressed in the form of a fundamental accounting equation. Under Dual aspect concept, total assets must be equal to equities or claim. That is assets equal to equities plus liabilities, right? Sixth important accounting concept, that is accounting period concept. The accounting period concept is related to going concern concept, which presumes that a business is likely to continue for an indefinite period of time. Each business chooses a specific time period to complete a cycle of the accounting process. For example, monthly, quarterly, or annually, as per as a fiscal or calendar year, right? Seventh important accounting concept is, that is realization concept. It is also known as revenue recognition concept. According to this concept, profit is recognized only when it is earned, and an advance or fee paid is not considered a profit until the goods or services have been delivered to the buyer, right? Eighth important accounting concept is accrual concept. The accrual concept is applicable to the recognition of both the revenues and expenses. The accrual concept means that all transactions must be recorded whether they are settled in cash or not. Revenues are recognized when they are simply become receivable, though cash is not received, and the expense are recognized when they simply become payable, though no cash is paid immediately, and both are recorded in the accounting period to which they are related, right? Now, ninth important accounting concept is matching concept. What does it mean, guys? Under this matching concept, this principle dictates that for every entry of revenue recorded in a given accounting period, an equal expense entry has to be recorded for correctly calculating profit or loss in a given period, right? 10th accounting concept is objectivity evidence concept. Objectivity concept means that the recording of the business or accounting transaction should not be influenced by the personal bias of either the management or the accountant who prepared the accounts. As such, all the accounting entries should be supported by a source document or business document such as purchase and sales invoices, pay slips, counterfoils of checkbook, vouchers for different payments, cash memos, agreements in regards to purchase or sale of properties, and so on, right? Students, on the basis of the lectures, these are the practice questions. Number one, who are the users of accounting information? Second, what are the accounting concepts, right? These are the references from where I have taken the content. Thank you, students, for listening my lecture very patiently. Thank you once again. Thank you so much.